Let me start over with Caterpillar. All right, so Caterpillar um, is hovering at an important previous support level. What I want you to notice, the cluster here, the RLCO, the RLCO, so you get this nice sine wave. And so now it's finding support here at 100. We'd be looking at 106 as a return to normal, and then fair value being marked at 111. That has stopped the upward tilt and has now gone sideways and started, that second leg down has started to bend the regression line to the downside. That's the real concern. So we would take that in stages: 106, 109 at the edge of the river, and then 111.50. Were it to break down here, how far down could she go? We would open this rascal up. And the next support level is down here around 96. And then 90. So if this does not hold to get back to 111, then we have a really nice trade frame on the downside. And so if we see market collapse, we'd want to add a second position here at 96 to the downside. And then if it comes all the way back to 82, that would just be horrible. 3 legs down. But then again, on the upside, we're looking at for 106 to the Bollinger Band mean, then 109 to the swing high, and then 111.5 up here at the RL270. So Caterpillar remains a very interesting intraday and then swing trade frame. We'll take a look at U.S. Steel next. Now it has basically come back and closed the gap after this really nice run up from 28 to 41. We have this huge gap, and now it's collapsed back basically to the Bollinger Band mean. So what we really have to see is 39 as the bottom support here. With the support level here about 39, we're just underneath the Bollinger Band mean. We would really like to see this take off and resume. It has to get above 46.5 to really have great confidence in it. Otherwise, it's just a tactical trade. But we've had quite a nice little pullback, but it's been orderly. And then this is all that support here around 40-ish. So this is really a favorable trade. There's a low risk idea just to a retest of the previous swing high. You could add a second position here above 49, above 47. So U.S. Steel was interesting. Critical state. Next up is DuPont. This looks great for a continuation play. Still early in the life cycle. Had this long period of sideways quiet channel. Sideways quiet channel here. And then the breakout, and it has never looked back. You notice the 270 regression line was down and has now started to tilt up. And here's where it crossed. And so this is still favorable to the upside. All you got to see is price above 72.80, and off it goes for the next leg up. Let's slide this back and see what the upside looks like. It's free and clear, no resistance overhead. So you can continue to buy DuPont on the signs of early morning strength. If it's doing better than the market, if the market's going up and DuPont is doing better, you can pile on DuPont and then trade that core and turbo. That's a very favorable chart. It's not too late. All right, now the other side on the industrial planet, Cliff, Natural Resources, CLF. This is what pain and suffering looks like. This continues to be a good short for us. I wish they could get it together, but this breakdown here at 13.5 was excellent. And you can see when support levels collapse, they collapse in a big way. And so this is very troublesome for Cliff. There's just nothing good about this at all. So what we can frame on Cliff's Natural Resources then is the Z trade. This is a pattern 7 swing trade because what we have is price outside Z minus 2. We could buy this on a Z pattern upon re-entering the floodplain, but not later than the river, with the idea of the Bollinger Band mean being a target, far side of the river being a target, far side of the floodplain being a target. In this case, even the I'd go as far as adding a target at the 270 regression line. And so if we were able to buy this at 1170 with a stop at 1020, that's $1.50 of risk. That's like a 12% stop. 1380 is well within range. That's not quite 2 to 1 to the RL 270, and then 14.5 is more than 2 to 1 just to the Bollinger Band mean. And then at the same time, it goes without saying, so I'll say it anyway, that failure below previous day's low is an auto short in Cliff. And if we look, let's look at Alcoa as the other side of the basic metals. Alcoa has already started its rebound. It's put in 3 days of finding local support down here at the Z minus 2, and then took out the swing high. You could have got that at 1590 or 1605 upon re-entry of the river. And so the target on this one is still the Bollinger Band mean, the far side of the river, the 270 regression line, and then the far side of the floodplain. So this support level here held, and now we're looking back at this kind of a move in Alcoa. That's the same kind of a move we're thinking about in Cliff, but it's easier to see in Alcoa. Okay, let's take a look at a couple ETFs while we still have some daylight here. Let's look at silver. And I just want to highlight the last move. I see Jeff and Sonal are here. And so the last time you guys were out here in Kansas, you may remember June 2014, we had a washout pattern, and I mentioned buying silver here. We got the nice washout pattern, cashed the position, we're able to reverse. Now we've got this one. This is a nice Z pattern once more at around 16.25. Yeah, that was good times. I can't wait to see you guys again. Kansas in November is going to be an awesome workshop. Got some great people coming in, and it's just going to be good. Let's zoom in a little bit on this, see what we can get. So we're starting to see another kind of favorable, failure to fail further in silver over the last 5 days. And we actually have, this was almost a washout pattern. But on a Z pattern, we could. I'm ready to buy this thing at 17 with a stop at 16.5, and then my targets will be 17.50, 18, 18.70, and then the far side here. I'm going to add a target here at the confluence of the RL90 and the RL270. And at the same time, I'm also ready to go with the inverse silver if it fails below that swing low. So silver is definitely in a critical state. I like the long side on here. This one looks like capitulation to me. Can't be afraid to own silver. So I'm a buyer of silver. Let's take a look at XLV, see what strength looks like. That's the strongest sector in the U.S. large caps. That's what strength looks like in XLV. I want you to notice just how powerful that RL270 has been. That's that bright purple looking rascal in here. And so there have been some fluctuations on either side of it, but that is an uninterrupted upward trend. And we have a nice consolidation pattern in here, and there's no reason not to believe this thing is going to just keep going. As long as it's the U.S. and the large caps and healthcare, XLV ain't bad. And so we have a nice little hammer there at 64.40. A little doji looking thing. I'm ready to buy this at about 64.60 with a stop, with a 50-cent stop down around here just below fair value. Even if you just use the parabolic stops, for 75 cents, and then I would add a position if it takes out the swing high at 65.25, and then off it just goes. That's just rewarding excellence right there. Okay. All right, that's a good solid hour. I'm gonna stop the recording there. I'm gonna the little trade frames. I'm gonna upload an additional video to YouTube, and I'll put the link in the chat room as well for these last half a dozen or so. So we can come back and look at them later. If there's no questions, thanks for hanging in there. I know it's late. We had 2 games today, and the girls they're playing better than they in any other part in the season. They won both of them. Their midfield play was excellent. Fantastic commitment to defense. They're really hitting their stride. Very proud of those young ladies. So two more wins this weekend. You guys take good care, and we'll see you in the chat room. Keep your risk measured and your powder dry.